you get to a point in your life where making money is not the easy part. It's about keeping it. And then once you keep it, it's about what you do with it, right? And me, Kris, and Ash spend a lot of time talking about those things in our personal lives and as they connect to business. So I'm gonna take this moment now to just let Kris and Ash introduce themselves. Kris, you wanna go first?
Sure. Welcome everyone. I appreciate the invite on, James. So thank you, Elliot, for setting the stage, and appreciate you, Ash, for joining as well. I'll keep it brief. I'm obviously the low man on the totem pole in this conversation, as I'm pretty fresh and new to the equity market. But what I'd just like to open up by saying is that, similar to what James was talking about, I've consistently and intentionally surrounded myself with people who are much smarter than me in a number of different sectors, industries, and professional acumens, and more specifically, just to make sure that I'm always upgrading my financial literacy. That's what I set out to do at the age of 18. It was incredibly important for me. It has helped me. It's helped me grow. It's helped me evolve over the years, and it's still something that's very critical and important to the way I navigate my life on a daily basis. So I'll pause and stop there, and I'll hand it off to Ash so he can give you a heads up on who he is and what he does and what he's about.
All right, thank you, Kris. James, thanks for this forum that you set up. Elliot, appreciate the introduction. Ashley Bete, I'm the principal and founder of Kineton Capital, with 23 years of experience in finance. By way of background, coming straight out of college, my first job was in investment banking on Wall Street. After that, took on several positions in finance and in technology, and was always able to kind of blend the two until very recently, in 2017, decided to break off and make a full-time job out of managing my own capital in the equity markets. And that's what brings us, so I've known Kris since college days. We're aging ourselves now, but a good 20, 25 years.
Fellas, you gotta say what that college was, man. You can't just let that float. Y'all keep vaguely saying college. You gotta throw it out there.
Yeah, we're both HBCU alums. We went to Clark Atlanta University. Very proud Panthers and alum of that school. So thanks for pulling that out of us, James. It's important. It's important that everyone right here understands and knows there's a lot of great talent across industries and sectors that are HBCU alums, as we've obviously just saw in our recent election. We had a Howard U alum who is now part of the current White House administration. So you can get incredible education at HBCUs.
Sure.
And then before I push it back to Ash again, because as Kris said, Kris so humbly said he's the lowest man on the totem pole, but I think we would both say that we both lean on Ash heavily, because I think my strength is in knowing my weaknesses, right? Like I'm a strategist, I'm a thinker, I'm an executor, I'm a diligent worker, and I like to think that nobody follows up on things more than me, right? But in knowing built my business, I come to realize, like, as you start to do some things positive in your life, there becomes there's three parts of wealth that Ash is going to probably start talking about. It's real estate, business ownership, and investing. And in the third one, I understood that investing was important, but it was just something I wasn't as confident in as I am in as I am with business ownership and as I am with real estate. Those two things I'm extremely strong in and I have tons of experience in. But when it came to stock investing, I actually reached out to Kris and was like, bro, Kris, yo, I'm horrible in this space, yo. Like, I don't know, I could just throw money at the stock market. There's some stocks that I like, but I need to get some information and some color around it. And especially just watching things happen. And the reason I give you guys this context is primarily because most people think like there's some grand scheme or plan around investing, right? Like, or there's some, like, there has to be some like 1, 2, 3 strategy. the first step is just reach out to your peer group of people and start to figure it out. And from there, I think I'll let Ash take, because I think me and Kris both got on a journey with really learning from Ash and letting Ash put us through investing boot camp when it came to stocks, and us working together to just learn more and build and grow.
Hey, before we pass to Ash, there's one thing I think I should interject and just say. Everything you just said is spot on, James. And I too was also very, I'd say, gun shy on getting back into the equity market until recent. But no different than if you play a sport. You have to mind your craft. You have to practice every day. You have to do your homework. You have to practice. You have to do all these things that get you better. The equity market is no different. And when I think about what Ash does, the fact that he lives on the West Coast and he's up at 4 and 5 o'clock every morning and working into the night to truly do the research, do the homework, to make sure the decisions he's making with his capital are the right ones, is that kind of energy, is that kind of effort, and that kind of intentionality that's required. It's definitely, you could take the GameStop approach, which is like going to Vegas or Atlantic City and throwing some craps on, throwing some dice on the table. You could take that approach, but I don't necessarily see a lot of people winning in that manner. So with that, I'm going to pass it over to Ash. He has some really interesting concepts and just, I say, cliche ways of thinking that he can bestow upon you guys just to kind of orient you on what the equity market is all about and how your approach should be.
Thank you, fellas. Very humbling to hear you guys speak in that manner. But the truth is, like James said, the three of us speak on a daily basis. And the fact that each of us brings a different skill set, I feel makes us more dynamic as we approach investment ideas. And like James said, he's very thorough about reading things, following up on things, and he'll hit me with certain questions. And as a trader, I never really looked at it from that viewpoint. But as an entrepreneur, he looks at the world very differently. And Kris does the same as well. So it definitely helps to surround yourself with people who have a diverse viewpoint on whatever it is you're doing, whether it's trading, real estate, whatever it is. The diversity definitely helps. But I wanted to just first talk about smart money. I think the theme around this forum is financial literacy. And judging from the audience here, it looks like it's predominantly African American, which is a good thing. The Black Americans, African Americans, are systemically excluded from the financial system. And I'll just throw out a couple of stats at you, which kind of highlight this point. 70% of African Americans live in what are called banking deserts. And what that means is it's a neighborhood that does not have a single banking branch whatsoever. There are 5,000 banks in the United States. Out of those 5,000 banks, only 21 are Black owned. Those 5,000 banks control $20 trillion in deposits. The Black owned banks control only 5 billion of that 20 trillion. But we make up, it's anywhere between 12 or 25% of the nation's population, depending on who you speak with. So you can see we're systemically excluded from it, which means we have to work and go the extra mile to actually teach ourselves financial literacy, just to level the playing field, not to be successful, but just to be on a level playing field as everyone else. And that's why I think a forum like this is very important. That said, my specialty is trading in the stock market. As I was speaking with James and Kris the other day, in the history of mankind, there's never been a wealth generator or wealth generating apparatus better than the US equity markets. And somebody took the time to track the equity markets back to 1942, which is a 79-year time span. In those 79 years, the market has been up 63 times. So 63 years, the market has been up and down for the remainder. The average return on the up years was 19%. The average return on the downside, on the down years, was 12%. The point is, the stock market usually goes up, and the wins, when it goes down, the wins that you see in the stock market always outweigh the losses. And so when you have that perspective, it's clear to see that over time, it's actually very difficult to lose money in the stock market. And that's a big misperception. People always think it's like throwing money in the casino in Vegas. It's not. It's a matter of perspective. When you view it from that lens, it changes everything. And it also changes how you research.
Ash, can you pause for 1 second there as you keep going? Because I want to unpack what you just said, because there's a difference between what you just talked about was, well, very briefly, you just talked about going long versus going short, right? Because everyone's seen what happened with GameStop, right? And that was a 3 or 4 day window of trading, right?
Right.
And it was a roller coaster. I think the world watched it and seen it happen, right? But what you just described was a very long term. Can you talk a little bit? And I don't know if you plan to later, so I'm gonna go in and out with you a little bit. Can you talk a little bit about the differences in day trading, right, and in going long, and how uninformed day trading is no different than just shooting craps?
That's exactly right. If you're day trading and looking for swing trades, etc., the odds are stacked against you, and chances are you'll lose whatever money you're trying to day trade. But when you view it from an investment from a 6 month, 1 year, 5 year, 10-year horizon, then it's totally different, and you approach it differently. The investments you make are different. I speak to James and Kris a lot about a utility called leaps. These are long-term, long-dated options, which kind of mimic regular stocks. And so think of a leap as stocks on steroids. You can actually multiply the amount of money you make over stocks by buying leaps. And when you know about certain things like leaps, things like options, and have a long-term view, it is very, very difficult to lose money, as opposed to what you just described, a day trader just going into swing trade.
No, I will come back to leaps and options. I'm gonna let you keep going. I'm gonna let you keep going where you were going, because you were on a pace, but I wanted to make sure we drove home that point. And does anybody, we could pivot there, because we got a tight group. Elliot, I didn't watch the chat, but we could pivot. And if anybody has any questions as we're going, please feel free to throw them in the chat, because largely we're going we're going ride Ash tonight, man. Me and Kris gonna be we're gonna play defense and get rebounds. We're gonna feed Ash to rock. And he is the specialist here. And once again, me and Kris add a skill set because of what we uniquely do every day and just how our minds tinker. But to Kris's earlier point about Ash, this is what he does 24/7, 365. The same way you may know me for what we do in business building, brand building with the Whitaker Group. This is what Ash does with the equity market in stocks. Go ahead, Ash. And if I need to pause for a question, Elliot, let me know.
Sure. So before we get to any questions, I just wanted to drive this one point. And I was explaining this to Elliot right before everyone else joined. The advent of the smartphone, and obviously coupled with the internet, has democratized the investment process to a degree where anyone in the world, it doesn't matter who you are, as long as you have the will and as long as you have access to the internet, you can teach yourself how to make money. You can have a 9-to-5 job that pays you $50,000, $100,000. And in a year or two, you can develop this investing process into a side hustle that makes you just as much money as you do at work. It's all about your will, and the information's out there. Having said that, we can back to you, James.
So we got one question from the chat from Tyrell asking about leaps and options. If you can go a little bit into that.
Do you want to jump the leaps and options, or you want to get into the basics and then let the basics go into leaps and options? Because we can start high and go low, or we can go high to come back low. It's however you guys want to. It's however you guys want to get the information, and I don't want to dictate that.
Sure. I think to answer that question, we should take it a step back and talk about what a stock is. I know this is very elementary, and I hope I don't bore you while I discuss this, but it's the benefit for everyone here. So a stock is effectively a piece of equity within a company. When a company wants to go in concern, say a company wants to raise some money, what they'll do is they'll tap the public markets by making available a certain portion of their company to the public. And the public buys into that company by the way of stocks. Now, to get a little more granular, in the hundreds of years that the stock market's been around, there have been many inventions. And one of the best inventions ever made was what are called options. And what an option is a derivative of stock. It's actually the right to purchase a particular stock at a particular time at a particular price. So you're not exactly buying the stock when you trade options, you're purchasing the right to purchase that stock or the right to sell that stock at a particular price. Options are traditionally, for many decades, were used as a hedging mechanisms, and they still are used as a hedging mechanism. But there are ways to use those as your only investment tool. So rather than buying stocks, some people invest in options only. The thing about options is, number one, your cost of participation in a particular stock is lowered dramatically. So if a stock costs $10, the option to participate in that stock will cost you a fraction of that, maybe $1, maybe less than that, maybe more than that. There are a couple of variables that determine the price of that option. So that's one of the main things. You can actually trade, make investments with less money than you would need to if you were buying stocks. The other thing is, because your investment is lower and they move more dramatically, you can potentially make a lot more money investing in options with lower risk than you would with stocks. Now, going on to LEAPs, LEAP stands for Long Equity Appreciation Options. All that means is a LEAP, by definition, is an option that is dated a year or more, 365 days or more from the day that you're buying. So I can buy an option that expires in December of this year. Technically, that does not qualify as a LEAP, but an option that expires in say May of next year is what's called a LEAP. Has the exact same behavior as any other option call. The only difference is the time to expiration.
Hey, Ash, thoughts on talking a little bit about the volatility of options?
Sure. So there are several variables, and these are known as the Greeks, and this is derived from mathematics, that determine option prices. And one of those is known as, it's what's called implied volatility, and that makes up the price of a stock. What goes into implied volatility are certain considerations. Number one is the stock itself, the expiration, the time to expiration from the current date, as well as the price moves within the stock, the intraday, intra-hour price moves. That's what makes up the volatility.
And if anyone doesn't understand anything at any time, please jump in the chat and I'll make sure I push it up to Ash. Go ahead, Ash. I'm sorry for interrupting.
So the reason that's important, and that's a very good point to bring up, Kris, is because paying attention to an option's implied volatility, which changes pretty frequently, can make all the difference in the investment. If the IV, the implied volatility, is high, you can use that to your advantage. And knowing that you go into the trade, knowing that it'll most likely swing in a big way, whether it's in your favor or not, it's going to swing. So that's a calculated risk that you can take by understanding what the implied volatility is.
Does that make sense? We got some question, yo.
Yeah, we got a question from Eric Sanders. Just probably bring it back just a tad bit. It's a question about 401ks, and he's wondering, is it better to have or to invest more into the stock market?
And Elliot, do you want to unlock them just so we can get a dialogue back and forth? Ash, unless you got some other stuff you want to go out, you want to You want to unlock them?
Hey, I'll jump in real quick, and I would just say that diversity, part of financial literacy is having a diversity of your finances. So there's absolutely nothing wrong with having a 401k, especially if you're, someone with, a career or a civil servant job. You want to make sure that you're lining yourself up so you're not overly dependent on one single mechanism to pad your existence beyond your working days.
And I'm gonna go a step further, Kris, and talk a little bit of just about the word money in general, right? Because it's this idea that you rap and you get a check, or you play ball and you get a check. Those are all income earning events, right? And some people's income earning event is bigger than others, right? Like if Elliot makes $200,000 a year on his job, and Eric Sanders makes $20,000 a year on their job, there's no real difference outside of that earning event. Everything after that is about how you invest your money and what you do with it, right? And I'm gonna let the question the gentleman who had the question get through that and jump back in, because I got to acknowledge that he's probably ready to go into his question. But I do want to get into Ash and Kris. I want to get into the idea of just acquiring wealth over the long term through real estate. Kris, like you said, just diversification of classes of investments and talking about equities, if that makes sense. But go ahead, Elliot.
So next we got Alex. I'm about to ask him to come up. I still mute, so you can go ahead.
Go ahead, Alex. Jump in. Don't be shy, bro.
What's up, y'all?
What's up with you?
It's Alex. I think my question was really just about trading platforms. Right now, I use Robinhood, but I have buddies who are switching over ever since the whole thing with Robinhood went down. And I was just wondering if you have other trading platforms that you would recommend as far as ease of usability and fairly low barriers to entry. Yeah, that was pretty basically my question.
I think the platforms have actually gotten to a point where they're all very similar. The issue that's caused a lot of people to kind of flee Robinhood is what happened with GameStop, where effectively Robinhood, being somewhat of a startup, was undercapitalized, and they were market making and allowing all this trading on their platform, but literally just got overwhelmed. They just weren't capitalized to handle that kind of volume. That's since changed, and going forward, they have a planned IPO where they'll raise more money and be under a lot more SEC scrutiny. So I wouldn't necessarily jump ship if that's what you're comfortable with. But if you do want to change, there are a wide range of options. I personally am a big fan of E-Trade. A lot of people I know in the business use interactive brokers, people like Fidelity, Ameritrade, etc. But in terms of functionality and capability, they're pretty much all the same.
Cool, thank you.
Alex, appreciate you, man. We got, I'm gonna mess this name up. I'm already knowing. Is it Joshan or Joshua? You can go up next, man. Just ask you to unmute.
Hey, what's up, guys?
What's good with
Y'all
you,
hear
bro?
me? Appreciate you guys. I recently watched a YouTube video, and this guy was talking about ETFs with Robinhood. I am very new to the game, so I don't even know what that means. So if you guys want to dive into that and kind of like how am I supposed to perceive ETFs and the process for starting up.
Sure. Well, welcome to the investment world. ETF stands for Exchange Traded Funds, and what it is it's a mechanism that financial institutions set up to give investors access to an entire sector, investment access to an entire sector via one tradable security. So for example, there's an ETF for pretty much anything you can think of. But right now, all the rage is in these space exploration stocks. And there's a company called ARK, which recently launched a space ETF. What that allows you to do is, as opposed to stock picking and going and doing research on every single space company that's out there, they do the research for you, and they handpick and select the space stocks that they think are worthy to be, or investable, worthy to be invested in. And you, by proxy, by investing in that particular ETF, are invested in those stocks that they've handpicked. So it removes the research burden greatly on retail investors and people who don't have 24 hours in a day to do research.
Does that answer your question, bro, Jashawn?
Cool. Yeah. I'm probably gonna have a few more questions, but I think I'm good for right now.
No, thank you. Please jump back in
Sure.
and let us know if you got another one. Elliot,
Yes, sir.
Appreciate you, boy. Elliot, who you got for us next?
Got Tiana Payne for us next. Tiana, you step to the mic.
Hi, how are you?
How are you?
Doing well. So I had a question about the income streams that you would recommend when it comes to investing. So do you recommend index funds over ETFs? Do you recommend real estate over certain stock options? What is your preference?
Which one of us? Ash, me, or Kris?
We can go with Ash.
Sure. Well, I can answer the question regarding the stocks and index funds versus ETFs. Quick answer to that would be, if you're young, I would encourage you to be aggressive. Index funds simply track the index; they track the market, and you will make a profit. But you have the ability to be, and the time on your side, to be a little more aggressive. And so, if you're in your early 20s, 30s, you can afford to lose money and make it back. But as you age and get a little bit older, then you might want to de-risk a little bit, and maybe index funds is something you might want to consider.
So yeah, I was going to say, you think you should take a higher risk when you're younger?
Yeah, I'm not saying go crazy, but with index funds, they're really passive, and you can afford to, if your goal is to make money and as much as possible, I would suggest not necessarily investing it in index funds at this point, and explore maybe individual stocks or possibly ETFs.
Okay.
Tiana, does that answer your question completely?
That answered the question with regard to ETFs versus index funds. I was still curious about whether putting money into real estate is a better idea than even per se ETFs or individual stocks.
Kris and Ash, y'all want to debate that one? Yeah, you know I got.
I would just ask the question. It all depends on what your goals are. Because real estate is more about. Well, there's a couple of things. Real estate, it depends on what level of real estate you're trying to get involved in. There's people who are into asset accumulation with the goal of building up a sizable portfolio that, would be able to garner a refi that can yield them a whole bunch of cash or sell it for a huge profit. There are people who are interested in getting into the commercial or even residential for the rental income. It really completely depends on what your goals are. What I would say is that, real estate has always, stood the test of time. And, it's, I'd say it's a pretty secure arena to go in. I'd say it's also a very competitive one right now. If you kind of look at, the market, any big city, any, I'd say, state that has a lot of people flocking to it, you can't really keep any inventory available for folks. So it's going to be a lot more competitive to try and get into that right now while we're still dealing with COVID. People have a lot of time on their hand. But again, I just simply said it all depends on what your goals are. James, what are your thoughts?
No, I mean, well said. It's pointless for me to be redundant. You hit everything that I would have hit. Tiana, do you feel like it captured curiosity?
No, I do understand he was saying it's based on whether you want to have rental properties or just to build a portfolio. My goal would be to have a commercial property and lease that out. So I knew, James, is that more your area?
Yeah, yeah. I love a person who does their homework. Yeah. Commercial property is good now, specifically because if you look at what's happening in the marketplace with COVID, and specific to markets, right? I think all markets look different, and everybody's goals are different. But there's tons of opportunity around commercial properties, because I mean the upside's so big, and with rates being as low as they are right now, there's a ton of lending opportunities. And I see from your picture that I believe you're a Black woman, so there's should be even more opportunities for Black women entrepreneurs. So I think if you can find if you have the money to invest in the right commercial opportunity and the ability to find a tenant, once you're able to get a commercial property rented, it's a lot, the leases are a lot more favorable to the landlord, right? A residential lease is 1 year in most cases, right? Most commercial leases are a minimum of 3 to 5 years, and the expenses are built into commercial leases versus with residential leases. Most of them are handled by the landlord. And I have both. I have residential and I have commercial properties. And early in my investing career, because I'm from Pittsburgh, and you can get properties in Pittsburgh back when I started for 9 and 10 grand, and you still can. They just might fall over if you hit them hard enough. But I started with residential because I needed to build to get where I am, because I didn't have very much capital, and I didn't have any banks that were willing to work with me. But I think right now, for the moment, right now there's a ton of great commercial opportunities.
Okay, and in Atlanta?
Atlanta's a crazy market. I mean,
inside the belt is no different than LA or San Francisco. It's hard.
Yeah.
It's going to be competitive. Outside the belt, you can have whatever you want, probably.
And I might need to look in Doraville then, somewhere around there.
Yeah, and it's interesting because it's funny. I just looked at a deal, and there's a deal inside the belt, and I mean, you can look it up on LoopNet. There's deals to be had under 1.5 in Atlanta still, but they're specific, and you got to understand when you're dealing with Georgia specific, there's just tons and tons. Like getting through their permitting in the city of Atlanta is a nightmare. So you want to make sure you have architect that's savvy, and you want to make sure you have expediters or have the time to go down there and get friendly with people in the city to kind of navigate your way through. And then even before you buy the property, take some time to get down to City Hall and talk to some of the inspectors and some of the people there. They would love to have somebody just to come and learn and ask questions, because they've been there for a long time, and they're full of information, and lots of it are flying out. Lots of it is flying out there when you get active. You don't have to be buying to be looking to understand. And if you're looking to understand, the opportunity might just fall in your lap.
Right. I appreciate your time. Thank you.
No, you're welcome. Yo, what you
Thank
got
you so
for
much. So we got Ricole next. You can go ahead, and I'm asking you to unmute right now. Go ahead and step up to the mic.
Cole, what up?
Yo.
Cole?
Oh, they had the shot.
Hey, can y'all hear me?
Yep, we can hear you.
Okay.
What up, cuz?
What up with you?
So here's the thing. I'm super new to stocks and stuff like that, but I'm looking to get into it. And I'm really trying to figure out, like, how do you read the market? Like, how do you know what's a good opportunity and what's not? Like, how do you build that instinct, I guess?
Oh, that's Ash.
That's a great question, and there are many ways to go about it. What I always tell people, and what I recommend, is and there's this quote that I saw a while back, which makes a lot of sense. And the quote is, the best investor is a social scientist. So if you take time to kind of observe things around you in your own personal life or people around you, take a look to see what trends are emerging that maybe no one else is looking at, and start to formulate your investment ideas from there. And I'll give you an example. When COVID hit, the market was terrible, and we were all sitting around, didn't know what to do, trying to think of investment ideas. And I happened to be staying with some friends at the time. I was stuck in another city, couldn't really go anywhere for a little while. And I realized how all the women in the house were wearing Crocs. And it just makes sense to me that as long as we're in this lockdown, Crocs, their sales are going to go through the roof. And sure enough, their stock went from, I think it may have been around $17. I'm not 100% sure. I have to go back and take a look. But it doubled in a 2-3 month period. So to make life easy for yourself, and this is something anyone can do, is just be observant and pay attention to trends and what's going on around you, and start from there. The other thing I'd encourage you to do is Twitter, believe it or not, is a great source for investment ideas. And offline, I can maybe share with Elliot a couple of Twitter handles that I personally follow, just to read up and see where the world is going and pick up investment ideas from. But
you gotta add in there, Ash, Peloton, and some of the other stay-at-home. Stay-at-home became a theme of COVID that sparked a whole new area of opportunity for day traders and people in the equity markets.
And I'll jump in and say, think about it now. With the world opening up and everybody running to get vaccinations, the reverse is going to happen, right? You're going to watch all the things that went down go back up because everybody wants to go on vacation. Hotels,
Right, I was just thinking that.
Hotels, airlines, all those things related to travel and entertainment. Live Nation's going to probably go to the roof at some point here soon because people are dying to get back to concerts. So all of these common sense ideas, to Ash's point, some of the answers are right in front of your face.
All right, thank y'all.
No, I appreciate you, Cole.
Of course.
Thank you. Okay, next up we got Rayhan. Rayhan, you can go ahead and unmute. Right?
Don't get nervous on us.
Oh. Okay, they said that the question got answered. Okay, cool. No problem. No stress. Next, actually, the man himself, Mr. Dave Butler. Say you got a question.
Brother Dave, what up?
What's up, family? Hope everybody's doing well. Ash, Kris, thank you for the time. Quick question just about ETFs versus index funds versus mutual funds. I know we already touched on ETFs, but I know some of the language or some of the understanding for me at least sounded familiar, or like they're linked in some way, or like they're representative in some way. So just wondering if you could break those three down.
Sure. So index funds track entire indexes. And then what an index is, for example, the S&P 500 is an index that tracks the 500 best performing and best managed companies in the United States. A lot of people talk about the Dow, and whenever they talk about the market, they allude to the Dow. Dow is very old, number one. It only tracks 30 companies. So it's not as good an indicator of what the market is doing as the S&P 500. But what the index funds do is they track either the Dow, the NASDAQ, or the S&P 500. Mutual funds are by definition long only and very passive. And what I say by long only is when you trade stocks, you can either, when you hear people say, I'm going long, it means that they're taking a directional bet that stock or the price of that stock is going to go up. When someone is short, that means that they're taking a directional bet that the price of that stock is going to go down. Mutual funds are regulated in such a way that they cannot go short, and that's done to protect the investors. Most mutual funds are invested via pension funds, money that you don't really want to be risky with. ETFs came kind of out of the need for people to get a little more aggressive, but still have the ability to invest in a bunch of sectors or a whole bunch of different stocks all at one time. And some ETFs do actually use a lot of leverage, which is another thing that mutual funds do not do. So there are ETFs out there that, by definition, they track a particular sector, but because they're using leverage, for every dollar that a particular stock goes up, that ETF will go up maybe $1.50, just depending on the amount of leverage that they have. The max I've seen is 2 times leverage, and I think that's the max permissible. So ETFs allow you to be a little more aggressive than mutual funds do, and mutual funds are more of a long-term play versus index funds. Did I answer your question?
Yes, sir. Appreciate it.
Who we got next, Elliot?
We got Tyrell next. Tyrell, man, you up?
Yeah, y'all can hear me?
Yes, sir.
Okay, cool. Yeah, no, thanks for listening to my question. I'm trying to go back to the chat right now to see what I said. Yeah, so I guess y'all kind of answered it. I was kind of thinking, like, I know like a lot of tech businesses were getting bought, I guess, at this time. I wanted to know like some good companies to go to now that we're starting to get out of the pandemic, but you had already mentioned, some airlines, a lot of the businesses that were kind of hit with restrictions and that are going to be unrestricted now. And so I'm gonna kind of let's highlight on that. So I'll go to the other part of my question. And it's how much should I save before I even start investing or start going into real estate or like starting a business? Like real estate is really the main one. So James, I kind of want to focus on that. But even on investing, like, I don't want to put $5 in. What's really a good number for like stocks and real estate?
Kris, you want to jump? Kris and Ash, you want to jump? I think it would go. It's the first thing, right? I think it's a percentage thing. I don't think it's a number thing. Ash, you want to course correct that statement? Yeah,
I would say when you start out investing, pick a number that you're okay with potentially losing. So, and that for everyone varies. But if you have 10 grand to your name in your account and you think you're okay with losing maybe 1,000 of that, just so you can learn. So actually, the way to look at it is you're paying your tuition to learn the investment process. And as long as that's fine with you, then that's the number for you. It really varies for everyone. And then as you start to think about like in general, I mean, my process was a little different, right? And it was kind of what we started saying earlier, just about, I came into it like young, 17, 18. I was just trying not to be broke. So I literally Googled what do you need to do to be rich or some crazy, and I don't even know. Yeah. And the 3 things that pop up is what we talked about earlier. So I really focused on real estate, and primarily I focused on real estate too, because it was my real estate at that point was my day job. Not a lot of people, I shouldn't say not a lot of people. There were a lot more opportunities back then because, where I was at, there was a lot of real estate. It's a small town, and a lot of people weren't thinking about what I was thinking about. So the barriers to entry was different. So it goes back to what we said about Tiana earlier. It's about the market you in. Are you looking to flip? Are you looking to build a portfolio? Or are you looking to build a portfolio to refi it out, to use the capital for something else, or to continue to reinvest? It goes back to what Kris said earlier to Tiana. What are your goals? Understanding your goals up front is super important. And the younger you are going into the process, the better. Like, I think I just heard it. Damn, I was just on an event before this. The keynote speaker at the end of the event, what she said was something along the lines of to hustle now, the investments you make now when you're younger in life, when everybody else is, doing whatever they doing with their bread, when you willing to like double down and keep all your, save all your pennies to invest, or to what Ash said earlier, to even pay the price for learning, right? You may have got lucky and took $1,000
and bought a GameStop when it was $6 and rode it and made 100,000, or you may have got unlucky and lost it all. Either way, there's a cost to learn, and if you're willing to pay that cost earlier, 9 times out of 10, if you keep going down that route, and you continue to be diligent, then it's gonna eventually show itself, and you'll do well. Does that answer your question, Terrell?
Yeah, that helps. Can I like bring up like a specific example and see if y'all can like play off of that?
Please go for it.
Okay, because like I'm gonna just use my own, experience. So like I've been working at a job for 2 years now. Like I had the 401k, I was putting money into it, didn't really realize it. I just kind of signed up for whatever when I first got it. I'm sitting at like 15,000 in it. And I'm like, okay, well, I'm thinking I retire in 50 years. How do I use this money right now? And should I even use this money right now? I know y'all kind of brought up retirement a little bit. And then I got like a few thousand saved up, and I'm just like, where do I put it at? I'm hearing a lot of things, and I'm just like, well, that sounds good. All right, that sounds good. I'm like, I can't really buy a house with it, so I might as well put it into a stock, so y'all just use that, I guess. Thank you.
Ash?
Yeah, I would say, again, going back to the idea of considering as tuition to learn the process. So personally, if I had 15 grand and I wanted to learn how to trade stocks, I'd maybe take 10% of that and go to Robinhood or E-Trade, do as much research as I can, and buy a couple of stocks and see how it goes from there. With the proper guidance and the proper dedication and time, I'm pretty sure that you can turn that 10%, 1,500 to 15 grand in little to no time. Is that helpful?
That is. Thank you.
Appreciate you, man. Thank you. Next up, we got Rashad coming up. Go ahead and unmute yourself, man.
All right. How's it going, everybody? Appreciate this. It's always good seeing people sharing info. So I wanted to share some good info. I've probably been on the investment, really learning things for like the last 2-3 years. So I wanted to share some with everyone. I saw a few people in the chat talking about where to really get the info. There's a guy named I Am Mark Monroe. He's on Instagram, and he has a YouTube series called the Come Up series. So it's a lot of people that are out here like trying to sell you courses or things, but he is truly like changing the game as far as giving away information for free to teach you how to fish and really learn how to pick those stocks and understand what you're doing. So I wanted to share that along with Earn Your Leisure. That's another, both Black guys really trying to help people out to understand money. So I want to put that out there. And then for Ash, I just had a question as far as where do you get some of your research from? So do you mainly go by like technical analysis, or like what do you really spend most of your time using to find those stocks that you're gonna put your money up with?
Man, it comes from everywhere. Like Kris mentioned earlier, I spend hours every day just reading information from a wide variety of sources. I start off my day every day reading the news, Bloomberg News, CNBC, all of those. Every once in a while, you'll find a nugget or an investment idea, and then you dig down from there. I also haven't been in the investment business for a long time. I get a lot of emails from people who might have a hunch that a stock might go in a certain direction, and they'll ask me for my opinion. And sometimes, as you look into those ideas, you find that it may be a great investment opportunity. So to that extent, your network is very helpful. But beyond that, social media has been a total game changer. Just like you mentioned, just going on Twitter, there's some people you can follow and just get a wealth of information and do pretty well building off of that.
Got you. Yeah, if you could share some of those Twitter accounts, that'd be super helpful. I appreciate it.
For sure. I'm not sure if the right way to do it would be to email them to Elliot, and then Elliot, if you can distribute them to everyone. Is that the way to do it?
No, you could drop them. You could drop them in a chat, and if you want Rashad, just cash at me, and then they'll come over directly. I'm joking, bro. I'm joking. Unless you're serious, I can see you my cash app.
Hey, you deserve it, bro. I got you.
I'm joking, bro. I'm joking. It's good seeing your face, boy.
Young game. Yeah, appreciate what you're doing, man.
All right, no doubt, boy.
All right, cool. Appreciate it, Rashad, man. We got Tasia up next with a question. So, Tasia, if you want to go ahead and jump on, she'll go.
Hey, Elliot, appreciate it. It's easier just to say TJ. It's
Oh,
time.
TJ. All right, bet.
James again. So this could be a question for either James or Ash to answer. So I already have my retirement set up with Vanguard, so that was the easiest route to go for my personal brokerage account. More importantly, to start my Roth IRA, which I did. So some was invested for 2020, heavily for 2021. And as I'm ending that cusp of student loan debt and not having Uncle Sam over my head anymore, is it smart to then just take the money that'll be available, because of course Vanguard has the minimums for their index funds, to just take the minimum of the 1,000 and invest that, let's say, in either S&P or the different funds, or diversify and split that 1,000 up where you can have the high dividend yield index ETFs that you can follow, real estate, and a number of other things. So just trying to figure out what's going to be the best course of action, probably within the next year.
That's a good question. I think I would explore the diversification options first, especially in the environment that we're in right now. It's been a rocky year, and diversifying with your holdings can only help you at this point.
Okay, because I know right now, like I track like a few of them, and they're relatively low, right? To buy in for one ETF for real estate is like 92 right now. High dividend yield is, I think, 100 right now. So my thought going into it is to not just dump the 1,000 into the index fund with that minimum. Also based on human behavior, right? If we sit on that money, something comes up and we end up not doing it, versus as soon as it's available, it's already budgeted out, just put that money into the actual fund itself and let it go. And I am one where I may not specifically want to go into real estate myself, but I don't have a problem with ensuring that I have some type of position in that market. Same with, I follow the companies that I follow that I'm really into, whether it be Nike or Jordan, who seem to take all my money every single month. So I would rather have positions in those. And I'm admittedly more of a passive investor. I would just rather let the market do its job, because I can just look at history and tell it's done that, versus me trying to day trade. I know that's all the thing right now with Robinhood, but it's like not what I've seen any actual wealthy person do.
Yeah, and it's knowing what you're good at and what you're not good at is a good thing. And if you're totally comfortable with just putting it in some diversified fund, then there's nothing wrong with that at all.
Now, I know there was a article recently that actually talks about the risk of such a passive behavior we've gone towards. And that was even from kind of within Vanguard itself. And as you know, like that, the founder of all the index funds was really the one who started to push those to get away from those really high fees of mutual funds and what it was really doing to like personal investors. So what are your thoughts on that in terms of some investors moving to be a little bit more passive?
Well, I think it varies. If you don't have enough time to sit there and watch stocks and study stocks all the time, then that's a great option. The key thing is that you're invested. As long as you remain invested, good things can only happen. Like I said, when we first started this forum, the stock market usually goes up, and as long as you're invested and in the game in one way, in one form or the other, you'll benefit from it.
No, I 100% agree. I know I had a coworker who said, "Oh, I lost 80,000 right in his retirement when COVID first hit." But I just kind of reminded him, well, you lost it on paper. You didn't really lose anything up until you choose to kind of liquidate your position, and then you've lost 80,000 versus leaving it in there. I know people panicked in 2007, 2008 when we really should have paid the piper and dealt with that decline, but we didn't because we were bailed out. But if people didn't pull it out then, they saw that money returned with more. So yeah, I was just curious about your position on that. But thank you.
Yeah, that's a key thing. Perspective and having a long-term view definitely helps. I mean, taking losses is tough. Believe me, I know it. I do it more often than I would like. But when your view is a long-term view, it kind of helps you to weather those and keep pushing and try to strategize going forward.
Yeah, I don't look at, I look at my account only to go in and distribute more money from my account. But outside of that, my retirement and Roth are sitting there up until I probably won't retire at 65. So they'll be sitting there until I'm 70. So I'm not worried about the day-to-day ebbs and flows.
It's a good thing.
All right. Appreciate you.
All right, thanks, TJ. We appreciate that.
Thank you, TJ.
Next up, we have Brandon with a question. Brandon, where you at? Go ahead and unmute yourself, and you can go ahead and ask your question for whoever you want to direct it to. Brandon, you there?
Brandon, you good?
Okay, cool. It looks like next we have, it looks like Chantel. Miss Mac had a question.
Uh-oh.
Miss Mac, where you at?
What's good with you,
I'm
Chantel?
here.
Okay.
Well, what's good is I'm trying to make sure I'm not dying from this second COVID shot I received. And so I'm laying here listening and soaking in. This is really, really great conversation. So I kind of I know the answer to the question a little bit, but I just wanted you all to touch on it because I feel like sometimes when you think about investing or you think about real estate or accumulating wealth or anything, it can be overwhelming to start the journey, and you can start, initially looking at Bloomberg reports and starting there and just reading all the day trade books, and you go there first. And so could you all speak to, because you've already said it several times, self-evaluation, taking stock of what you have, knowing what it is you want. Can any of you speak to that a little bit, like that journey for you? And then I have another question after that, but just speaking specifically to like the importance of self-evaluation, paying attention to things around you, taking stock of what you already have as you enter into the journey. And would love to hear something from all three of you.
Yeah, I think it's some of it is just understanding how to hustle, man. Like, because it's about the pure acknowledgement when you talk about the self-evaluation piece. Show me somebody who it's story, right? That tons of athletes after they finish playing sports go broke. And that's largely because they just don't have any level of financial literacy, right? Or understanding of money. And you look at people who largely start off with nothing. And they just make the right decisions with what they have. So it's just knowing that, like, yo, at some point in your life, like the one dude that was talking earlier, you might be in a place right now where you only get $2,000 or $3,000. But it's about what are you willing to do right now to get that money, right? The market ebbs and flows. Everybody said, oh shit, the world's ending when the market tanked, right? And hit 18,000 when COVID started. But the market went from 18,000 to 30,000. So you could have been in 10 different stocks that went tenfold at that point. There's so many stocks that went from that I can't even start to think of them, but Farfetch, Shemai, I can name off ticker after ticker that went 4, 5, 6, 7-fold. So some of it is just about being aware of what it is that you want, having goals, and being intentional about doing the work. Because if you're doing the work, you'll see the information, you'll get the information, and you'll be able to make the move. Does that make sense? So to me, that's the self-evaluation point. That's the looking in the mirror and simply being honest with yourself and saying like, yo, you going to sit and pray and hope to you, or you going to pray and do some work, if that makes sense. Go ahead, Ash. That's my 2 cents.
Makes total sense.
Great response, James. From my viewpoint, again, like you said, it's about assessing your needs, your wants, where you are. But the way I view things, and particularly in the stock market, is based on my experience. As long as you're in the game, you'll find those jewels, those trades, those investments that'll just go crazy. That'll do like an 1,800%, 1,500%. They don't come very often in a year. But if you're not hustling every day, trying to look for them, you're not going to find them whatsoever. And one or two of those trades can make your entire year. And one of the stocks that James just mentioned is one that we spent a lot of time working on last year, Jumia, which is quote unquote the Amazon of Africa. And I'm just saying this anecdotally, just to share the experience that we had with it. It's a stock that if someone had purchased Jumia on October 15th of last year and put that money away. So if you purchased options, 6-month options in Jumia, October 15th, put that money away. If you'd invested $10,000 on February 15th, that $10,000 of yours would have been $180,000 if you hadn't taken it out. Those type of opportunities are there. They're actually everywhere, but you don't see them unless you're waking up every day and hustling and scouring the market up and down for the opportunities.
Mm-hmm.
So I hope that that sheds some light on at least the way I approach things.
No, that's good. Kris, could you add anything to that?
I think he's.
My apologies, my internet went down. I came in on the tail end of that, so I'm not quite sure what the question was. So I want to be able to answer that properly.
Yep. So the question was, how important is self-evaluation and taking stock of who you are and what you have as you enter into the journey of financial literacy or understanding wealth, understanding stocks, accumulating wealth, keeping wealth. And I said that because some people enter in overwhelmed and they jump and start doing other things based on what other folks are doing versus taking stock of who you are and what you have in your tool, but whether it's in your bank account or in just who you are. I just think that's important. And so I feel like you all have done that at some point in your lives, in your careers and building your businesses, because you've said it over and over again on the call. So I just wanted, you said you all mentioned it at some point. So I wanted you to speak to it.
Yeah. What I say to you, Chantel, is that self-awareness is a key to life. When I think about and reflect on like my upbringing and the neighborhood that I grew up in and the people I was surrounded with, and James can attest to this because we've talked ad nauseum about, both of our experiences. One of the key reasons why I said financial literacy is like an important, has always been a priority of mine is because I didn't have anyone that grew up around me who was financially literate. And kind of more to your question, you have to have a level of self-awareness. I think a lot of times there is this desire to run before crawling. And that's how we get ourselves into a lot of trouble because we don't take the time to obsess and study the things that we're about to enter into. And that's probably one of the biggest faults and like the kisses of death of getting involved in anything, whether that's, setting up a lemonade stand or selling newspapers. It's okay to watch the kid across the street run his paper out and get to know how he's doing it and understand where he's procuring the newspapers, how he's getting his route, how he's collecting his money. You got to study before you jump in. And I think a lot of times, we always like obsessing the results versus actually, looking at what it took to get to the end result. So yes, self-awareness is critically important.
And my last thing, I'll just say that I appreciate that James said and that Ash said as well. Thank you for that, Kris. Again, you all keep speaking to it at some point, but Ash, when you said, when you wake up, the first thing you do, well, not the first thing you do, but one of the things that you do is you turn on, I think you said Bloomberg Report, and you sit and and you listen to it or you watch it. And then for you, for Kris and James, you all talked about how you all have regular conversations with each other. Or you understood your weaknesses, James, you said that, and how you surrounded yourself with people who could kind of help you in that area. And I think that is so important. And when learning language, I love learning languages. And so one of the things that I do, especially when I was learning Spanish, I would turn on Despierta America. I don't know what they were talking about at first. I just turned it on and just surrounded myself with the sound and got into it. And eventually I was able to start picking up different things, or just being able to have conversations with people, but I wasn't afraid to jump in and at least listen and hear the conversations. And so with the smart money deal, you all, just for those who are listening, even for myself as a grown woman picking up little nuggets, it's really neat that you all are in here and that, gentlemen, you have given time to sit and share. It's super important just to even hear it. And you might not get it all right now, and that's okay. But please keep showing up and please keep asking questions. I just wanted to say that, and thank you guys.
No, thank you, Chantel. And I'll go over before the next questions. And I think life and being successful about life is a long game, and it's about setting your traps. And no different than an athlete or whatever you wake up and intend to do every day. Think of life like working out, yo. If you go to the gym every day and you eat right, eventually you cut up, and that's something that everybody can appreciate right now because everybody's on the gram or everybody's on some social media site. So if you wake up and you do the work every day and you do cardio and you eat right, it shows, right? Money is the same way, yo. Like if you get up and you're intentional about setting your traps and making sure that you're getting your information, you're doing the work, even if you work in a minimum wage job right now, what you do right now, you could be in that space right now, but the work you do is going to predict where you're going next.
Yes.
Elliot?
Yeah, that was a great point. Thank you, Chantel, again, too. Appreciate that. Eric, you got another question, man? I know you had your hand raised for a little while now.
Yeah, I just want to say thank you guys so much for giving us the time to even ask you guys these deep questions and getting us, all set for the future. And, because I feel like I'm never living in the present because I'm always trying to look ahead for that next gem, that next dollar, you know what I'm saying? But one thing I just wanted to relate to, because like I was asking about the 401k, because I've always just, had Fidelity and stuff like that because I work and stuff. So with the bank, so they always just, you can put more money here. They let you play around with it. You can invest more in the company. Look, you can spread it around how you want. But I'm more of a hands-on type of learner. So, I mean, the way I've learned how to make money, is having more than one hustle. Something like what James said, and something that I do back home. We have land, so we have cattle. So, we try to learn how to, raise cattle, keep more money. The more cows you get, the more food you have to buy. You have to always calculate things like that. Most of my family come from farming, but they don't know the business side of things. So then, so the other thing that me and my brother have been doing is trucking. So the trucking business is always booming, but it really did pick up over the pandemic. We went from buying one truck to getting 3 trucks, but at the same time, it was some ups and downs. You buy a truck, people, jip you out a deal, everything's okay at first, then the truck transmission go out, then boom, you $20,000 in debt, So, I mean, just with going through that, that's a new way I've been learning how to make money, but not just from the stock market part. I'm trying to put those two worlds together, so that what advice could you, hand me over, just to be able to try to focus on from that hands-on experience into the stock market world?
I'll jump first, Ash, and then Kris, I'll let you go. I think you've already said it, bro. Sometimes no different than the conversation I said when we started with earlier with Kris. Sometimes you just in your own way because you got confidence around trucking and farming because that's what your experience has been, right? The same actions apply to real estate and then investing, right? You know innately how to start something with farming or how to start something with trucking. Investing's the same way. You already made a step coming here, right? The Twitter handle that Ash is going to drop in is going to be in the chat is there, right? And there is more financial information out there than you would ever believe. And some of it's not free, like Bloomberg. What do Bloomberg cost, Ash and Kris? What is it? $30 a month? $30, $35?
Actually, you can sign up for as low as $1.99 for, I think, a 6-month period, and that allows you access to a whole lot of information.
Yeah,
And
go ahead, Ash.
just one nugget, one piece of information that you can translate into an investment can make you a lot of money. So it's definitely worth it. It's definitely worth your time. And what's $1.99 a month?
And listen, one of the things that I remember being told in college is once you leave college and you get the information in 4 years, it doesn't stop. You have to continue to educate yourself. And to educate yourself financially, you have to ask what are the best financial tools? What are the tools that the best financial analyzers are using every day to help get information and understand what's happening in the market? That information is out there readily available to all of us. There's no secret book that Ash is reading that don't exist. He's just diligent about, like Kris always say, getting to the information and making sure he does the work. No different than Kris is in my network, right? And Ash got in my network because me saying to Kris, like, I'm weak in this space, and us talking about it. And he like, you know what? I have a friend. Let me reach out. And that started a whole nother conversation. Ash and Kris, I'll let y'all jump in. I was a little heavy-winded on that one.
Hey, Eric, did you say that you also work a job as well? Because you mentioned the 401k bit.
Yes. Yeah. I've been in banking for at least 10 years now.
Yeah. So what I'd also just kind of say, with the diversification exercise you're going through with, your side hustles, and also your regular job. One thing that I can, bestow upon all of you guys from my own experience to what James was saying earlier on in my life, the information was there. I just didn't necessarily know how to get to the information because I wasn't necessarily surrounding myself with the right people. I wasn't asking the right questions. But as an example, to your earlier question, everybody on this phone who actually works for a company and has access to a 401 benefit, shame on you if you're not leveraging it, because I would bet that your company has some kind of match program. So that's essentially free money that you get. And when I say free money, not free money, you've earned the right to participate because you're providing a service and value to that organization. And they're rightfully matching something that's also providing a benefit to them, because I'm sure that there's tax benefits for them on the other side of that. But transactionally, everybody should be in a 401k. If any of you on here works for a publicly traded company, shame on you if you're not involved in your employee stock purchase program. You know why? This is another mechanism for you that you can be making 10 to 15% on your money every quarter when your employee stock purchase goes into your account. Again, nobody's going to tell you these things, but there's no way, unless you're in the equity market, that you're making that kind of money with your money sitting in the bank and accruing interest on a daily and monthly annual basis. So it's really incumbent upon each of you to educate yourself, to ask the right questions, surround yourself with the right people, to figure out where these mechanisms are within your organizations, in the outside world, wherever you may, be traveling and leveraging your experience on a daily basis, because there's things out there that will help you continue to diversify your wealth building and accumulation. Another thing, to an earlier question on real estate, and the only reason I even knew this is because I went through it. I've been buying real estate since I was probably 23, 24 years old. So over 20 years now. And there's almost like levers of, entry points into being able to get a piece of the dream. And when I first bought my first property, I was able to take advantage of a first-time buyers program, which allowed me to put down a 3% down payment on a home. Now, obviously, fast forward and you kind of think about, what that looks like as you're buying property 2, 3, and all of those things. it obviously goes up exponentially. But to take advantage of these benefits to you because where you are at in the stage of your life, you're a fool if you're not. Because now you're starting to diversify. It's getting you into the game. It's getting you into an asset proposition that's going to also provide you tax benefits as well. So it's you got to surround yourself with the right people. You got to get to the information. Yeah.
Yeah. And just to say something else to what you just said about the 401k, like the matching and things like that, that's something that I always try to do because I found there was a loophole in that. Because even if you're making 60,000, you know, you can put back 20,000. I don't really need much because I have other things. So I try to put most of 20% of my salary into my 401k because there's less tax this every year. They don't tax that money. So I tried to drop that in the, you know.
Yeah, that's another very smart and savvy strategic lever and benefit to 401k that I didn't mention. So thanks for bringing that up, Eric.
Yes, sir. I appreciate you.
Eric, appreciate you, man. Thank you for that. Next question is coming from Tiana. Tiana, you can go ahead and unmute yourself and ask your question.
Hey, so everything that everyone was saying kind of ties into what I was asking. I actually work for the largest staffing company in the world. I work for Ronstad's corporate office. And so, Kris, exactly what you're saying, they have all of these benefits and all of these HR services that most of the employees don't even know is an option for them. And I don't know if that's HR's fault or if it's the employees need to be more involved in doing the research on their part. But I was asking Ash, I was like, what's your take on this FIRE movement that's been the craze these days, financial independence, retire early?
Well, actually, I'm not that familiar with the movement, but just based on how you describe what the acronym stands for, it makes sense to me. It sounds like it's just a group of people wanting to take control of their financial destiny and being aggressive with it, which, like I think we alluded to earlier, the time to do that is when you're young. And actually the time to do that is when you don't have a whole lot of money because you can make mistakes and learn from those mistakes.
Mm-hmm.
I'd much rather make a $10,000 or $1,000 mistake than make a $100,000 mistake.
Right, and like James and Chantel were saying, this past year, because of where I work, we speak to thousands of employees every week who get paid weekly, but are still struggling, living paycheck to paycheck. And most of it's lack of knowledge or lack of information, knowing what their options are when it comes to finances. And so it really does take just immersing yourself and figuring out what Facebook groups you can join, what podcasts you can listen to, because the information is out there. Like y'all were saying, it's just about immersing yourself. But the financial independence, retire early, it's like they're like saving 70% of their income in order to try and retire by 40 is usually the ages that they're all talking about, 40, 50. But being aggressive, like you were saying, and knowing what your risk tolerance is probably what they're taking into account too.
And Tiana, I'm gonna jump in real fast because I don't that's just called grinding where I came up at. Like, I ain't about retiring early. That's pretty much how I move. Like, yo, spend very little and try to make as much as you can, and everything you getting in, find a good place to invest it in, right? Like find a business you can build on the side, or find something that gives you a good return on your money, because you know the whole real estate residual income thing, that's where that came from for me. Like, it wasn't about trying to retire early. It was just simply saying to yourself, if you know it costs you $5,000 a month to live on, and you get $8,000 a month in residual income,
that extra money,
you're retired, right? You essentially don't need to work for anyone else because your income exceeds your expenses. So it's just a calculation on what do you need to live, what do you need to have in residual income to not have to show up to work every day. Does that make sense? And it's just about, it goes back to everything we said earlier. So regardless of any acronym, it's about what everyone's personal goals are for themselves. If you want to live on $200,000 a month, right? You should probably have a residual income of $300,000 a month, right? It all depends on how you want to live, right? So you don't necessarily have to do it at $5,000 a month. It could be 500,000. It's just about your personal goals and the goals that you set for yourself. Make sense?
Answer your question?
Yeah, that was it.
Sounds good.
Elliot, how many we got? I want to be respectful of everybody's time, so we're gonna probably call it a night at 9:30. So let's try to get anyone who didn't get one in, and if everybody got them in, we'll wind this one down and get ready for smart money next month.
For sure. I think that the last one's gonna go to Rashard. He has one more question for you guys, so I'm gonna go ahead and let him go and ask his question.
Yeah. So this one's for you, JR, because I know you've been doing real estate for a long time. So I know I've talked to you briefly, but could you share some of those like calculations you need to take to really understand like that you're making a good investment with that rental property? So I know every market is different, but I feel like there's different sheets that I've heard of to kind of give you an indicator that this is a good deal when you're trying to rent properties.
I'm a back of the napkin Negro, right? And I wouldn't say, right? So I do my math different. Now, Ash will probably do the calculation more specific, right? But for me, I'm looking at, you could either be looking at your cash on cash investment, right? Because if you're using cash to buy asset, then it's easier to figure out your return. You can also look on the beautiful part about real estate and stocks, but easier with real estate, right? Because we can get into margins next time, right? Or how to borrow money against stock. We'll save that for next month. But for me, I'm just looking at the return on each investment. So like my dollar, if I spend $1, if I can make 30 to 40 cents on $1, then I'm gonna keep spending them dollars. Does that make sense? And it's simple math. Like in Pittsburgh, where I was investing at in my 20s, and hell, even now, I didn't stop until I had excess, until there were no more opportunities in Pittsburgh for me to invest in. Because if you're making 40% on $1, you invest as many dollars as you can get your hands on. Does that make sense? So for me, go ahead.
I think I get carried away like trying to look for these like huge investments. When you break it down to like 30 cents on $1, like it doesn't seem like much, but that's big money when you getting that every month.
I'll give you another one. I just seen one come on to MLS today. There was a duplex that came on for $175,000. A duplex, 2-3 bedrooms on each side. If you got 2-3 bedrooms on each side at $175,000, round up to $200,000. And I'm going too fast, right? But I'm gonna go and say you get 3.5% interest on both. 3.5% interest, that's $350 on every 100,000. You got 700,000 plus taxes and insurance. You at $950. You at $950 for one half of that duplex. What's your rent on that? What's your rent on a 3-bedroom? Probably $950 or $1,000, right? So now one of the units pays your expenses, right? The other unit is your what? Is your profit, right? Now, if it only costs you 20% of 200,000, which is $40,000, and your return on $40,000 is roughly $1,000 a month, you do the math, right? If you 20 years old and you got good credit in a job where you can get a mortgage, I'm not a 21-year-old that's going to go buy a single family house. I'm going to go buy a duplex because my tenant's going to be paying for my rent. My tenant is going to be paying for my mortgage and some, and I'm going to take that money and put it back in the kitty and keep hustling. Does that make sense? That's why I said I'm more of a back of a napkin kind of a dude, because it's, you know what I'm saying?
Hey, can you put that recording out, just that part, in a little snip? Because that was real. Make it simple.
Yeah, no doubt.
Appreciate it, Rashard, man. Thank you. I believe that was the last question that we had. Ashley, James, Kris, unless you guys have anything you want to get into. I know that we've been going, it's about 9:30 at the moment, so you guys want to wrap and continue on, just let me know.
No, I think Ash and Kris, I just want to be respectful of both of y'all time, and this is something we're gonna do monthly. Like we do free game, and we get into a lot of things around business, but with smart money, the goal is going to be to keep it about financial intelligence and investments, and we're going to lean on Ash with equities, and lean on Kris in his experience in real estate and just in business in general. And the goal is to just be able to have this platform to be able to talk about money and to have a place where you can come and ask questions and not just assume that we all know it all. And for everybody here to understand it, like, we all vulnerable, we all learning. Like I just learned about leaps again. Obviously, I learned about it in college, but I never took the action of investing in leaps or took the action of investing in options. So all these things are things that, like, yo, we're all learning together. So, it's better when you can when you're vulnerable, you can have people that you can have questions. And we just want to create a safe space for people to come in and learn the rules about how to make money the smart way and just to build financial intelligence.
Yeah, I'll just add to that. I appreciate you setting this forum up, James. You never cease to amaze me with giving back, and this is just another element of giving back. And I say this is something at the core of me, and just have an opportunity to be here and be part of this giving back element is incredible. I'd also like to thank Ash for joining in with us as well, and Elliot for setting it up. And then I just like to say in finality, I appreciate all of you who took the time out to come today and attend and listen, and more importantly, ask questions. I'm a big believer in closed mouth doesn't get fed. So, please just continue to ask away. You can't be shy when you're trying to gain information and knowledge. That's the only way you get to it, is by asking, and information is power. So more power to all of you all for attending and asking the right questions. Thank you.
Thank you, Kris. Ash, you want to bring it home for us?
Yeah, I'd like to say, well, to you, James, thanks for this platform and this forum. It's very helpful and very enriching for me to be able to get on here and share the bit of experience that I do have. And if it helps somebody else, then that's a blessing right there. Just want to leave you guys with a couple of thoughts. And the whole gist of this is to drive home the point that no matter where you are in life right now, it's important to get started. It's important to get started to learn financial literacy, and you guys have taken a big step by taking a couple of hours of the evening to join us in this. But here's a couple of nuggets and a couple of numbers that I want to leave you with. If in 2015, if you had invested $500 in Bitcoin, that $500 would be worth $80,000 today. Think about that. Think about how quickly you can blow through $500 on a night out, on some clothes, on a date, whatever it is. If you spent $300 worth of Amazon stock, bought $300 worth of Amazon stock. Now this is going back to 2002. I don't know if some of you all were around, but in 2002, if you put $300 into Amazon stock, that would be worth $500,000 today. Think about that. The stock market is a powerful wealth generator. And I look forward to seeing you guys next time.
Thank you, fellas. Thank you, Elliot. Thank you, everybody, for your time. We're looking forward to see you guys next month on Smart Money. It'll be fun, and we'll start talking about some margins, and we talk about how the stock market exploded last couple of days with some big margin calls. I'm looking forward to next month.
Thank you, guys. I appreciate everybody here. Thank you to the panelists. Thank you, Ashley, James, Kris. Thank you to everybody that showed up tonight. Follow us on APB Store on Instagram. Make sure that you stay tuned for the next one. Like James was saying, we're going to be doing this every month, so I'm really looking forward to it. It was really great information, great questions. Everybody have a good night. Thank you.